Hi everyone. Today let's talk about diversification. This has been something that really hasn't been super great in markets over last year, but so far this year it seems like diversity is the name of the game, so let's talk about it. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So 2025 has been the year of diversification, and it still is an important concept when it comes to investing. Let's see why they're talking about it. They said, like I said before, for the last couple years, diversification has not been great. We've had a ton of tech and cryptos that have gone basically parabolic over the last couple years, and it's been a great time to be invested in those things. But US stocks have crumbled while gold has surged 25%, Brazil key stock index up 18%, low volatility stocks 12%, copper jumping 22%. So we've been talking about these different portfolios. You can see Easy Rider, Momentum, and All Weather have kept you covered. So let's continue to talk about those. What do we mean when we say diversification? The main thing here is non-correlated assets. So things like gold, things that go up in different environments versus your high growth tech stocks, which will go up in a different environment. I also talk a lot about yielding assets, things like REITs, things like bonds, which also benefit from different environments. So again, all of these things will help you beat the swings, help you beat the crashing tech stocks that we've seen so far this year. They had a really good week, which was interesting. We'll see if that comes to fruition at all, but you can see Mag 7 dropping by almost 20%. They were very, very expensive. We talked about that on the channel for the last several months. So where do we go? We can go to those outside markets. Euro stocks have also done well, returning close to 30%. German stocks 7%, which is a 22% gain in dollar terms because the dollar has been moving down while the German stock market and really all of European stocks have done really, really well. Brazil stocks, like I said, 18%. China stocks 8%. Not sure I want to be there regardless, but they are growing. So if you don't care about the principle of it, maybe that's a better place for you to be. Diversification, like I said, across the different sectors. Low vol even has done well, returning 12%. Don't forget about different asset classes. Like I said, gold has done really well. I think that trade might be softening here soon. It's had a really, really powerful run. I don't think that's going to continue forever. But treasuries, we've been talking about bonds, tips added 2.5%, investment grade corporates chipping in 1%. I've been saying buy bonds. They've been in a good position. If you've been buying them all year, you've probably made money on those, even if it's just a little bit. Either way, it's better than going down with the markets the way we've seen. Grains, beans, soybeans up around 4%, really good there. So basically any kind of commodity has done well. And if you're curious about these portfolios, I'll go ahead and link this article in the description, but I've also talked about these on the channel. Easy Rider portfolio is just a mix of assets, global and domestic, as well as commodities and other things, all weather, and then that momentum rider. I do really like the idea of momentum rider. That's just looking for the best sectors, the ones with the best structures, and putting money into those. We said staples had a really good move there. I still like REITs here. Discretionaries look a lot better now than they did before, and utilities also having a good move. Tech, not so much. Transports, not so much, right? So you want to find the best sectors and put your money in there. Momentum Rider really just goes with 3 different sectors per quarter, and then they rebalance every quarter. Looking at Fear and Greed, we finished the week at a 35. A really strong push, honestly, for this week. Makes sense with price action doing what it did, but you can see continues to push above this previous high here. We're not out of that fear yet, but it's been a nice push out of extreme fear. You can see this price action here. Are we going to come all the way up, test the 125, and then reject from there? That could be interesting. But so far, it looks okay. And then looking at strength here, you can see extreme fear continuing to turn up just slightly, but at a very depressed level. And then breadth recovering slightly, but still at a low level, same as the previous. Put call ratio, again, very, very high, but continues to come down slowly. And then volatility, this is the one that I am very concerned with. You can see we are right here at that 50-day moving average. Are we going to bounce here and establish a lower high? I think that's certainly a possibility. Safe haven demand spiking up here almost to the 0 line. You can see it's in neutral. Stocks and bonds kind of even out here. And then junk bonds still in greed. This has recovered quite well after spiking a lot. and so far it's moved down a pretty decent amount towards that 1.4 area. Moving over to the AAII survey, you can see the neutrals widening out here. The bulls continue to contract. 28, 25, 21. Bears contracting slightly, neutral expanding, which makes sense as we head into that major resistance. We talked about it on the Friday. We'll talk about it again here today, but neutral expanding, that's where I'm at. I am kind of neutral here. I think there's a small chance we could break higher, but realistically, I'm kind of over here, right? I think we're going to step into bearish next week, but who knows? Neutral for now. Moving over to seasonality. We haven't talked about this in a while because it really has not mattered, but you can see the second half of the month is supposed to be quite bullish, really the whole month except for that early portion. And so far, that's kind of worked out. Into the end of the month, nice little push here. Last day of the month, not as good, so just keep that in mind. And then looking at May, you can see that first part of May, slightly bullish to flat, and then the end of May, it really starts to pick up mid-May into the end of the year here for post-election years. For non-election years, it's actually a pretty terrible month. You can see generally negative through mid-May, sell in May, go away style move, but we'll see. Right now, post-election says slightly bullish. And then rounding out seasonality, we have basically nothing for the Monday. Tuesday, slightly bullish. Wednesday, not so much. You get a ton of data there. Q1 advanced, interesting as well. We'll see if that matters. And that bearish head indicating some weakness for the Wednesday. And then looking at the beginning of May, first trading day of May, up 18 of the last 27. So pretty good data there. And then for the Friday, unemployment rate. So you do have that jobs data and no indicators there as to which direction. So we'll see if this weekends, that could be interesting for markets. Moving over to earnings for the Monday, we have Welltower Waste Management. Not a whole lot there. Domino's Pizza is fairly interesting. And then as we get into the Tuesday, these earnings start to ramp up pretty aggressive. We have Visa, Coca-Cola, AstraZeneca, Honeywell, Pfizer, Sherwin-Williams, USPS. Always want to watch those transports. Those give us a better indicator of where the economy is going. What they are seeing in terms of demand is always an interesting indicator. Microsoft, Meta Platforms, Qualcomm, Caterpillar here. For the Wednesday is going to be a big one. You also got Garmin, Yum Brands in there as well. And then for the Thursday, it is Apple, Amazon, Eli Lilly, MasterCard, McDonald's. And then you do have a little bit of staples and some more transports in there. Southern, MicroStrategy, CVS, also interesting. Dominion Energy, again, like to watch those smaller energy companies, see what they're seeing. And then to close out the week, we have the big energy plays with Exxon and Chevron. Moving over to the economic calendar in a little bit more detail, pretty much nothing except for JOLTS openings, Q1 data, like I said, expecting that to be quite bad. GDP numbers for the Eurozone, GDP numbers for the US on Wednesday, definitely going to be interesting. Core PCE pricing there as well. Pending home sales, interesting. Atlanta Fed GDP Q2 pending, that could be interesting. ISM manufacturing data, that is also an indicator of where the economy is going. Want to see what that looks like. And then for the Friday, CPI data for the Eurozone, and then all of that U.S. unemployment data. Expectation here is a 4.2. Think that's going to be interesting. Remember, this was a step up on expectation last iteration. If that happens again and starts to become a trend, that is going to be definitely a weakness for markets, in my opinion. Moving over to Max Pain. Weird Max Pain this week. You can see Max Pain's at 540, so lower than current stock price. Put walls here, 535. Some here at 540. Call wall 550, which is already a little bit below where we're at. There's also puts and calls at 560. Would not expect to get anywhere near that, but realistically, I think 550 is an interesting sell. I think we'll end up below that, somewhere between 540 and 550 for this week. Makes the most amount of sense for me. And then just look at all of these calls. 600 calls there, 590 calls, some out here at 630. Not expecting to get anywhere near any of those, but there is a ton of calls, more calls than puts even on the massive spike there at 535. So expecting a little bit of bearishness out of this Max Pain. Moving over to the charts, starting off with the weekly charts here on the S&Ps. You can see we pulled back right to that 9 EMA, 55, 39.72. That's pretty much where we're at. 55, 25, 22. So I suspect we're going to touch there, maybe even touch the zone here around that 56.38 area. And then we'll see what's going to happen from there. That's going to give you the SMA touch on the weekly chart. So I think that's going to be interesting for markets, especially in this zone, once we get that touch this week. And then in terms of targets, that would not give you a whole lot of upside here. Somewhere around 2 to maybe 3%. If we reject from there, I think we could head right back to these trends here, which would be about another 8% lower. which is where we were just a couple of weeks ago. And then moving over to that daily chart, you can see that downtrending structure, down move, consolidation, down move, consolidation. This is a wider consolidation for sure. We had the huge spike, very wide ranging move, but within that, you can see this kind of rising wedge to this resistance area. If we pull back, like we talked about in the Friday video, that is about a 6 to 7% down move potentially. Right now, the momentum is bullish. Right now, the RSI is above that 50 line, which is interesting. Can we hold above the 50, or is this going to be a major rejection from this area like we saw in that last iteration? Again, if we see that kind of 2 to 3% up move, that takes you right to the trend here. And that would be a major resistance, in my opinion. Breakdown, retest, breakdown, take you back to here. So 3% up, and then you could see another 13 to 14% down move, in my opinion. So that's kind of what I'm looking for. Can we get a little bit of continuation? Yes. Is the risk still to the downside? Still yes, in my opinion. And then just for an update on the levels, 550.12 was my resistance. Now that is support. Your next level to the upside is 559.76. And then that major trend resistance up here around 566, 567. Moving over to the Tasty charts here for the SPY charts, you can see we came right down to that lowest ATR band that was at 508.15. That also took us right here to that August 5 low. Touched that low and immediately bounced pretty powerfully from there. You can see 55 EMA on the weekly chart, 554.11 on this chart, just barely above that 8 EMA is going to be interesting. If it can hold, maybe we see a bigger, more powerful rally up to this trailing stop all the way at 594.85. I doubt it, but it is a possibility, something to consider. And then looking at that daily chart, still in bearish conditions here, even with the low, higher low setup, continuation. That trailing stop right now, 559.74. So a lot of things in confluence in that area between that kind of 560, 565 area. That would be this consolidation here. We're basically right at the low of that consolidation. Do we reject from here and push lower? Absolutely a possibility. We don't know for sure yet, but this is what I'm watching for. If we see this continuation, your low target would be all the way around that 477 ATR band, which is a very substantial down move, and that would take us to a lower low as well. Moving over to the charts here for the NASDAQ on that weekly chart, you can see we did just barely miss that 5 August low, so the NASDAQ did outperform structurally just a smidgen. Didn't quite touch it, didn't quite hit that trend line, but we did go lower initially, ended up rallying through, eclipsing that previous week, got just through that 9 EMA at 19,280, somewhere in there. Can we rally up to that kind of same zone we talked about on the SPY charts? 19.9 would be interesting. That's absolutely a possibility. Will we hit this major trend here as well? Also a possibility. Take you to that kind of 20,160 area. That would also take you through these kind of consolidation highs, at least in the short term, maybe take you to this level here, that October-November low from 2024. In terms of price though, I just don't see this structure changing. You have a clear double top, you got a clean breakdown here. I am still expecting a lower high somewhere in here, maybe even lower, and then expecting a continued flush out to these levels here, to that 200 around the 15,790 area. So if we did get a flush from here, that would take you about another 19%-ish down from current. If we did get the rally up to this kind of zone here, that would be eventually another 22% down after going up another 3 to 4%. So something to watch for in here. Can we rally through earnings and then sell off from there? I think that's absolutely a possibility. Then looking at the daily chart, you can see that same kind of setup. Looks like we're going to get maybe a little bit more continuation here. You have to keep in mind the rising wedge pattern that we talked about on the SPY charts, which is basically culminated. So short term, definitely a little bit concerning. Can we pull back, hold this zone, and then rally through again? Possibility. But I do expect to get to this zone at some point and then reject from there to a much lower low. And then giving a quick look at those levels, 471 was resistance, and then we got above it. 471 is now support. 477.84 is your next resistance. Above that, I have 486.84 to watch as your next zone of resistance. Moving over to the Tasty charts here for the Qs, you can see that 55 EMA right there at 475.84. We are pretty much right at it, 472.56. Are we going to touch that? I would expect that we will. And then that's going to be a major level. You can see the trailing stop was there for a long time. Are we going to hit that level? Yes. Are we going to close above it? I just don't think so. Not on the weekly chart. I think we could overthrow it fairly substantially, and then I would expect a bigger turn down. The lowest ATR band right now, forward 21.28, so pretty substantially lower. That's about $50 lower here on the weekly chart. And then looking at that daily chart here, you can see the 55 EMA once again as resistance. 475.92 on the daily chart, trailing stop also there, 475.87. I expect that we'll touch that. I expect that we'll get into this consolidation. We're right at the low of it here, back through mid-March, and then once we reject from there, you can see just how low that lowest ATR band is. That would take you all the way down to potentially 396.47. So I'm expecting a bigger waterfall off at some point. Either way, expecting a pullback short term. Is it going to follow through to a lower low? I do think it will ultimately. Does it happen this week? I think is still a question mark based on the data and the earnings we get this week. Moving over to the Russell here on the weekly chart, you can see we are in that same zone of resistance, 195 to 198. Looking at that 9 EMA there, same kind of zone, right in this kind of 197, 98 area. 200 also sitting there at 198, 97. So big zone of resistance, also consolidation bottom before we had this bigger down move. So had a almost 10% down move week, and then we were up 1.7, 1.1, and now we had a 4.1% move. I don't think we're going to engulf this big down move candle, but momentum swinging to bullish. We're going to get that RSI touch here on the weekly chart, and then I suspect we'll get either a double bottom on the RSI or a higher low setup, and then we'll see if we're going to get that continuation. But I do expect to see a rejection off of that weekly RSI SMA. And then looking at the daily chart, giving you some perspective, the Friday was flat, so the Russell did underperform fairly substantially. Again, 195 resistance, 198.75 your next target. That's the consolidation bottom here before we had that bigger breakdown. Can we get there? Can we get to this zone in here maybe? Trend line 202.70. Got my 55 EMA in there as well, 203.98. Moving over to that Russell weekly chart, you can see that 8 EMA there, 195.89 again. So this is a key zone. Are we going to continue this downtrend? We were super extended. We got the rally up. This is the retracement. In my opinion, I think that is just about complete. It makes sense why the Russell did underperform on the Friday because it was already at that 8 EMA after the touch. Expecting this to reject lower. The lowest ATR band right now is 181.62, which is only about $13 lower from current price. It'll be interesting to see if we get that move down. And then looking at the daily chart, still in bearish conditions, trailing stop 205. Can we get all the way there? Probably not. You can see right now your resistance is that 34 EMA at 195.28. Basically no volume on those bullish days, waiting to see a rejection here. And you can see the lowest band is all the way down at 166.17. I think that is a potential for a very slightly lower low. We get some divergence on the RSI where the RSI is stronger, but we have a lower price. And then we could maybe see a bigger retracement, in my opinion. And then moving through here a little bit quickly, you can see on the week, 2.48% for the Dow, 404.47 is your next resistance. We were basically flat Thursday, Friday, just like the Russell charts. You can see we're right at this consolidation high, consolidation bottom back from July and September last year. Are we going to hold here? Are we going to reject from here? Again, I still have the same kind of thesis. Maybe we go a little bit higher. Maybe we touch the high from last week and then we reject lower back into this kind of low consolidation range. It is a very wide ranging consolidation, and it does look more like a triangle on the short time frames. You can see we're quite a bit further away from that RSI SMA, so maybe we have a little bit more to touch, or we come up short on the Dow because the Dow has been a little bit of a laggard relative to the other markets, but just something to keep in mind. You do have that same setup potential, and I would still expect a lower high from this previous high here. Moving over to the equal weighted S&Ps here, you can see we have this zone of resistance here around 171, 172. We'll see if this becomes a zone of resistance or not. Right now, momentum continues to swing to bullish, but same setup here on the RSI for the equal weights. Are we going to touch here and then reject and give that double bottom higher low setup potential? I still think that is absolutely a possibility. Structurally, we've already hit the 200 and the 144, so that's a little bit weaker than some of the others, although I do still think that those other major indicators are going to hit those levels, and then we'll see what happens with markets from there. And then going a little quicker here, you can see SPY Russell. SPY Russell was completely flat. NASDAQ SPY, big move here for the NASDAQ. Big NASDAQ outperformance this week. We had the MAG 7 outperforming really, really powerfully. I thought we'd get a little bit more continuation back to that 343 level, but it seems like we're in this kind of same consolidation range. Can't seem to get below the level. Can't seem to get above 355 for any length of time. We did it for a couple of weeks and then eventually pulled back here. So right now, while we have seen historical outperformance from the SPY over the last 4 weeks, not so much. NASDAQ was underperforming, and then last couple of weeks, we are relatively flat as well. So it seems like all the major indicators are kind of waiting for some kind of news to drive us one direction or the other. Moving over to the SPY divided by the M2 money supply, you can see that same kind of setup heading towards that 8 EMA at 25.29. I suspect we'll get a touch of that zone. You can see that is an important zone here. Takes us back to this kind of consolidation low here, almost to this level there. And then looking at the RSI, probably going to get the touch there as well, and then see one more dip, higher low setup or double bottom potentially on the RSI, and that should give an indicator about where we are going over the next couple of weeks. So again, slightly bullish here. I think we could get at least a wick higher, and then I would expect a rejection. So big wick rejection, maybe outside wick rejection on a day, and then expect some follow through to the downside based on this structure. Moving over to the MAG 7. MAG 7 had a great week, 9.34%. Makes sense why the NASDAQ did outperform this week. Absolutely massive there. Headed towards that 273.41 level. If we can get above it, maybe 283 is in play. Again, expecting this to be a major zone of resistance. So even if we go a little bit higher, ultimately, I do expect this to continue to break down. And I do want to see that touch of the 200 and that 144 EMA, which is all the way down here between 208 and this kind of 216 area. So if that does happen, that takes us about another 20 to 23.5% lower potentially. 217 is a level. There's a trend line in there as well. Momentum swinging to bullish. RSI, we're going to see if that RSI gets touched. Is it going to be a major zone of rejection? I suspect that it will, and then we'll see a true bottoming pattern here. And then are we going to get that kind of broader rally out? I think that remains to be seen. That'll put us more in the time frame of the end of earnings, as well as maybe some updates on the geopolitical tariff risk. Moving over to Apple and Microsoft, both of these having really, really solid weeks. Again, 211.55 is the resistance. You have a zone here as well, 217. That takes you back to VWAP, 55 EMA zone. Are we going to get there? Potentially. Same kind of setup, RSI resistance, we'll see. And then do we get that slightly higher low rejection, pull back to that consolidation bottom potential? And then looking at Microsoft, similar setup, except we are above that SMA here. So structurally, I like this a little bit better. You already have a low, slightly higher low here, and then we've rallied through that SMA, giving this a little bit more legs in my opinion. We're already almost at this consolidation high here. Can we get above 349.22? I think that is potential. And then once we can, then your next level is all the way up at 413, which would give you about another 5% move from there. So is this the zone? Looking for that breakout on Microsoft. And I really like the idea of this already being above the SMA on the RSI. That is a big bullish indicator for me on the weekly chart. Moving over to Tesla and NVIDIA. Tesla was up massive 18% on the week. Got all the way to these kind of wick highs. Got all the way to VWAP. Can this continue to the 21 EMA? Another 18%? Possibly. That would be interesting. We said on this round trip move, hold consolidation, breakout. There's also the potential for softer self-driving regulation out of the White House, which would be absolutely massive for Tesla. If that did get put into full self-driving and potential robo-taxi in certain places, that would be a huge profit margin, huge driver for growth for this company. And then looking at NVIDIA, still don't like this really at all. You can see the same kind of downtrend action. We just got extended off of the downtrend, and now we're back into the downtrend. Are we going to reject from here and then just continue this kind of slow grind lower? I think that's most likely. You can see the SMA, as we've been talking about, continues to be resistance. We are right at it. Are we going to reject from there again? I think that's absolutely what's going to happen. So watching for that from here. If we can get above the trend line, maybe we see more consolidation sideways, but I'm just not really expecting anything to go higher in the current geopolitical risk as well as current valuations. Moving over to Amazon and Alphabet, both of these having good weeks. Mag 7 had a really good week. week. Overall, you can see we're right at this consolidation, just barely above the 188.61 level. And then looking at Alphabet above 161.59, that's your current support. If we come back and retest it, then you can look for that kind of continuation of 170.95 in this mid-range here. I don't love the potential for a couple of dollar down move here to that support area, but looking at these RSIs, it's really the same setup as everything else. We're probably going to hit that SMA, pull back, get a lower high setup on the price action here, and potentially a higher low setup on the RSI, and then we could look for that bigger reversal. Moving over to Meta and Broadcom. Meta had a good week, 9.13%, tested that level 489.67, touched that support, rallied right to the trend line. Is this going to be resistance? It's a little bit further off of the SMA here, so you have more room for this to rally through 9 EMA at 574. That would be interesting. This has been a massive down move. You had a straight up move of many weeks in a row, and then we had a straight down move off of that. Round tripped a lot of that move, really from back here, September to current. And then looking at Broadcom, this looks a little bit more bullish here, but you have to look at that SMA. We're right at it. We'll probably get a touch of that next week. And then you got VWAP here at 194.05, my level 196.23, and you can see current price 192.31. So just below VWAP, just below the level, looking to retest that RSI SMA. Moving over to staples and discretionary. Staples continues to hold kind of in this same consolidation. Is this a higher low setup, zone of support, momentum slightly bullish, RSI is support here on the SMA, just barely above it, looking to see if that holds. Are we going to get the hold here, continuation higher back to that 84.50 area? I think that is the play, at least from here. If this breaks, then you're looking for a push closer to this kind of 75 area. Not a ton of volatility on staples, but it is kind of built for that. And then looking at discretionaries, big up move, 6.5%, driven by Amazon and Tesla. Momentum stepping to bullish, RSI, that same setup, right? We're looking to test the SMA, want to see it reject from there, get the higher low setup, give us a better entry point on the potential for a rally, and then we could look for a bigger push here, maybe as high as that 21 EMA in the 214 area, get the lower high setup off of this structure here, hit these trend lines out in this zone, and then look for that broader down move. I do expect this to continue to the downside medium term, but short term want to see a higher low setup continuation into this area here. Moving over to breadth. As you can see on breadth, we're already in the peaks here for 20-day breadth. 68.14. You've had many turning points between 68 and kind of this 75 area. This could be a zone. Maybe we get a doji on the week. Maybe we throw a wick and then reject. Momentum still slightly bullish. RSI still slightly bullish. So understand we're nearly there. You can absolutely go higher into this kind of 85 to 92 area, maybe, but I just don't believe it. Maybe we get that short-term kind of wick rejection from there. And then looking at 50-day, still in this very much downtrending structure. You have this high, lower high here, low, lower low here. Looking for another lower high, continuation lower is my expectation. Does that mean we can go to 40? Yes, that would still be a much lower high, maybe as high as 46 potentially. I wouldn't expect to see anything higher than that though. But I wouldn't expect to see anything higher than that. Moving over to 200-day breadth, you can see we've had 3 weeks in a row of bullish. It has not moved very much. I do not expect this to go above the 36 level, but even if we didn't, that would give you a potential for just a little bit more up move here, retest some of these levels 1 to 2 days to get here, and then a continuation lower is my expectation. This is still very much a downtrend. And it's really tracking with the same kind of structure as the broader markets. This is a better indicator for that, and you can see it here, downtrending SMA, looking for the retest here, continuation lower, higher low setup potential, and then we'll see, does it go higher from there? Anytime you see oversold conditions, that is usually a decent time to buy. But you can see here on this downtrend back in 2021, we hit almost oversold, rallied slightly, almost oversold, rallied slightly, oversold. So you can have periods where you do hit those for extended periods, but generally when you touch it and then get that retracement, something like this back here in 2020 or something like this in here in October, once you get those kind of peak lows, expecting for a broader rally, eventually want to see that one more retracement. Moving over to the dollar, has the dollar finally stabilized? We've had many weeks of straight downward price action with just very small retracements, but now we threw a wick to a low, came back and managed to stay positive, so an outside reversal week. Oversold conditions on the weekly chart, you don't see that super often. Momentum very, very extended here. Currently sitting at a 0.97 to the downside. You can see it back here. We did get to a -1, and that ended up being a nice buying opportunity where we had about a month of bullish price action out of there. Did eventually retrace that move, but then we held and ultimately went higher from there. So something to consider. Is this a short-term bottom? I certainly think that it is, especially with that wick rejection. Still need to see it get above my level, 99.83. Did not close above it this week, but watching it closely. And a more stable dollar should give equities a little bit of room here, even if it's just another pause week. And then we get some kind of retracement back into this kind of 102.9 area. That would be interesting, and then we'll see what happens from there. Moving over to bonds. Bonds had a great week. J&K up 1.39%, TLT 1.5%. Really like bonds. I've been buying bonds, been saying to buy bonds for a long time, and I say continue to do that. Momentum swinging to bullish on J&K. This had a nice little panic buy in here, and now it looks like we're back into this kind of normalized trading range. Still think this is going to be an opportunity anywhere below the 200. I think we'll eventually get above it there and ultimately trend higher over the next couple years on J&K. And then similarly here, TLT did rally up to the level 89.16. I said anything below 89 is a buy opportunity. I still think really anything below 100 is a buying opportunity, but in these levels, absolutely a longer term buy opportunity. Is it a short term trade? You do have a nice low, slightly higher low setup here, expecting some follow through, looking for that 100 level. Moving over to the VIX, big down week here for the VIX. We ended up pulling back to the trend line here. Again, I think the trend line is going to be a zone of support. We've been watching that trend line for a long time. We cut through this zone here, looking to see this zone hold at the trend. Next week, that's going to be around the 25 area, which is basically where we are right now. Momentum is still stepping to bearish. RSI is still stepping to bearish, but I do like this zone in here. We'll see if markets can hold here or not. If the VIX holds here, however, that is going to drive equities lower, obviously. If this breaks through, then you're looking for this kind of 19 to 20 area as your next zone of support, and then we'll see what happens there. Moving over to my accounts, I ended up profiting about $650 on the week, so you'll like to see that. Nice little positive week. Obviously underperformed markets, but on the broader context, year to date, definitely in a profit where the broader markets are not. I've been able to dodge a lot of that down move, even making a little bit of money here and there on those bigger down moves. So overall, a little bit frustrated with the performance, but still happy with those gains. I didn't trade a lot this week. You can see my day trade counter right now only at 15, so totally fine. I was pretty busy at work, so that's a little bit of a cop-out, but I just don't think this rally is going to hold, and I'm looking for the bears to come back in at current levels or a little bit higher, and then I will absolutely be looking for those bear trades and potentially playing them a little bit more aggressively, just waiting, just biding my time until the setup starts to follow through. I have my thesis. Sometimes you have to be patient on that thesis and wait for the market to give you evidence for that. So again, bearish thesis going into next week, but need to see a little bit more confluence on the shorter time frames for that potential setup. Let me know down in the comment section what you think of market diversity in this market. Where are you putting your money, or are you just continuing to buy tech and only tech? I'm sure that you're not, but let me know where you're putting your money. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.